Hello and welcome in this tutorial on how to use this Fitness Studio financial model template. This template can be applied to any fitness related business as long as it is members based. So if the revenue stream is based on a membership, and then it might have additional revenue streams as we will see, but as long as it has the main revenue stream is membership based, then this financial model template is the right one for your fitness studio or dance studio or swimming pool or kickboxing gym or whatever. So the first tab that you will see is the color coding tab, which will give you an overview of the type of cells that you will see within the financial model. So as you can see, depending on how the cells are color coded, you can distinguish 5 different types of cells. The most important one is the input cell. So yellow cell with blue font. If you find those cells, then it means that you can modify those cells in order to customize the financial model to your specific business. Then you might see hard-coded cells, but they are very rare and uncommon. For example, in this particular financial model, you won't find any. Then output cells, which are the result of a formula. Linked cells, which are basically cells linking to some other cell. And then not applicable cells. Whenever you see cells that are color-coded as not applicable, you should empty those, as those will be ignored by the model due to user set inputs. So while you fill in the input cells, you will build different scenarios for your business as you are customizing the financial model template to your particular business. And so several scenarios won't apply anymore, as we will see later. And so in that case, the model will tell you that certain cells are not applicable anymore, and so you can just ignore them. Then the second tab is the table of content, which gives you an overview of what you can expect in each tab down here. So the first tab is the inputs tab, where we have the model's inputs and assumptions. Then the dashboard tab, which provides a snapshot on the financial statements and metrics, and it includes charts and tables that you can use in your pitch deck or business plan. Then we have the financial statements tab, that includes the 3 pro forma financial statements for a period of 5 years or 60 months, the profit and loss statement, balance sheet and cash flow statement. Then we have a valuation tab, which provides an estimate for the value of the company based on the present value of projected future cash flows. Then we have the calculation tabs, where basically we calculate revenues, cost of goods sold, expenses, full-time employees, so basically your hiring plans, capex, capital expenditure, and debt, if any. And in those tabs, as we will see, you can see the nitty-gritty of the calculation and have a breakdown not only year by year, but also month by month. So starting with the input, as you can see, each tab is structured into sections. And to expand a certain section, you just need to click on the small plus button here. So let's make it a little bit bigger. So the first section is general information, where you can select, for example, the name of your company, the financial plan start date, the fiscal year end, the gym opening, the name of your business opening when you actually start operating and making revenues, and then which currency should be used. Then the second one is cash starting balance, so how much cash on hand you have when you start, the corporate tax rate, and what the unit is called, so in this case, member. Then we start with the quantity of member. As you can see, we give you here the opportunity to input how many new members you get every month. So here you can account, for example, for seasonality. And each month you can insert the amount of new members that join your fitness studio or club or dance studio or your particular type of business. Then here you can select the maximum number of members per month that your business is allowed to have, because for example, your gym, for example, will be space constraint, right? So there will be a certain amount of maximum members that you can have, and so you can set it here. And then the new members growth rate per annum here, you can modify with this cell. You can modify how much those numbers here increase every year. So first year, for example, in January of the first year when you operate, you have 20. And then if we keep 5%, then the second year, this number will grow by 5%. So it will go to 21. Once this is done, you can move on to the next section, which is revenues. As you can see, we have coded two main types of revenues. The first one is membership, and the second one is additional revenues. So starting with membership, we give you the possibility to create 3 types of membership tiers with the different pricing, different growth rate if you want, and of course, different customer mix, right? The customer mix basically allows you to give the probability of a new member to fall into one of the categories, and then the average lifetime of the contract that they enter in, which will of course result in a certain churn rate. So the average lifetime is, yeah, as mentioned, the time of the average life of the contract. For example, here a premium contract, you expect it to last 6 months, and then the customer just leaves the gym or the studio. And so in this case, you can put 6. If you expect it to last 1 year, then you can put 12. And of course, the churn rate, the average monthly churn rate will change, as we have seen. Then going down, we have additional revenues, which can be, for example, a personal training program, can be a drum program, can be apparel and accessories, can be food and snack. You can select, not select, but input up to 5 categories. So you can input whatever you want, the name, and select the percentage of members that you have every month that purchase each additional revenue stream, the average price that they pay for each revenue stream, and how much this price should grow per year. Then once this is done, we can move on to expenses. So the expenses, we have different types of expenses. We have recurring expenses, and we have one-time expenses. For cost of goods sold, you can see the first 5 cells here. Those are the category that you can insert. So for example, test 1 and test 2 and provider's fee. Then for example, here you can select the specific expense item that you want and select the category. You will find a drop-down menu, which is populated by the items that you insert here. So if you just insert provider fee, for example, then the drop-down menu will only include provider fee. You can select the expense date, so when the expense should start, and then how you want to calculate it. It's a drop-down, and we allow you to select between share of sales or fixed amount. As you can see, we have cells color-coded as not applicable, and the reason for that is because if you select share of sales, the model will only consider this share of sales, while if you select fixed amount, it will consider only those, right? So fixed amount monthly that you want to pay and how much it should grow per year. While if you select share of sales, then you should input a percentage here, right? Because the model wants to know a certain share of then moving on, recurring expenses, those are the expenses that are recurring. And again, you have the different categories that you want to consider here, and that will populate the drop-down menu that you will find here. Then you can select the specific expense item here, the expense start date, again, the calculation, share of sales or fixed amount, and expense, and again, share of revenues if you select share of sales, or fixed amount and expense growth rate if you select share of sales. And then finally, we have one-time expenses, those meaning those expenses that you incur in only one time. Like for example, initial setup fee and initial maintenance, for example. You can select again the category from the list that you have inputted here, in this case, admin. And then the expense date, those happen only one time, so this will be one time only, and the expense amount. Once this is done, we can close this category and move on with the hiring plan. The hiring plan section allows you to insert, as the name suggests, your hiring plan, so how many people you plan to hire. Again, you can select the categories, which is basically the department, the drop-down menu department here that you find here, and then the different role. So for example, trainer 1, 2, 3 part-time and admin. You can select the start and end date. So for example, you just want to hire the admin, giving 20,000 per year, and just hire him or her for 3 months from January to March. Employment taxation 10% and salary increase 2%. If you don't plan to fire them, but want to keep them indefinitely in your model, just leave it empty. And in this case, this expense will start in January 2024 and go on indefinitely until the end of the model, meaning 60 months. Then the next section is CapEx, so capital expenditure. For example, maybe you're opening a gym or a swimming pool and so on, and you need to incur in certain capital expenditure, like machines, for example, or accessories or whatever, and you can input those here. The purchase date and amount, and then the depreciation schedule. The depreciation schedule allows you to set the useful lifetime of the capital expenditure. So for example, if you expect the machines to last 15 years and after 15 years you need to replace them, then you select 15 here. This will allow to properly distribute the expense across 15 years or whatever lifetime value you insert here. And then the last category is balance sheet, where you can select inventories, receivables, and payables as a share of COGS for payables. And then equity and debt. So in case you have an investor that invests money in April or whatever month, you want to insert it here together with the investment date, the amount, and the name of the investor. so that we can properly account for this cash inflow. And then in case of debt, if you incur in any debt, you can add it here. We allow you to input up to 3 loans with the borrowed amount, remaining months, debt issuance, when you start repaying, and the interest rate. And in case you want to start this financial model and you already have a loan, then just insert the outstanding amount that you still need to repay with the remaining months. Debt issuance, just put the start of your model. So if at the start of your model you select 1st of January 2024, then just put the same date here. And debt repayment start date, you can put it January as well if it's already outstanding, and then interest rate, whatever interest rate you have. So once you have completed the input, then you can check the dashboard to see basically the results of your model. We have 3 main types of dashboards: numbers, charts, and charts and numbers. So starting with numbers, as you can see, we have different metrics and tables. And by expanding whatever metric you want, you can see the results of your model. So for example, additional sales per month, cumulative members, membership revenues, and so on. So we can see that, for example, in 2026, you have 113 premium members, 207 base members, and 79 members that purchase the classes only, for a cumulative 400, which is the maximum that you're allowed in your model, because we remember here in the input one, we selected maximum number of members per month, 400. Then additional sales per month, we have in 2026, 480 purchases every month of personal training program, dietary nutrition, and so on. Then membership revenues and so on. I mean, you can see the different types of metrics from this dashboard. Then the same but charts here. So same with the charts, which you can use, for example, in your business plan or pitch deck. And then if you want both charts and number, this third tab allows you not only to have both charts and numbers, but also to see numbers, to break down numbers month by month. So not only year by year, as we can see here, but by clicking on the plus button here, it will expand and you will be able to see the evolution over month. Then the financial statements include the 3 pro forma financial statements: profit and loss, balance sheet, and cash flow statement. By expanding which one you prefer, you can see the data that you need, both year by year and month by month. So revenue, gross profit, EBITDA, EBIT, earning before taxes, net income. Same for balance sheet, total asset, total liabilities and equity, and cash flow statement, operating cash flow, investing cash flow, and financing cash flow, and cash at the end of period. Then the valuation tab allows you to have an estimate of the value of your company based on certain assumptions that you can insert, like the revenue growth rate for the extrapolation period, the average cost of equity, the share of debt, long-term growth rate, and so on. This will result in a certain weighted average cost of capital. And then based on the inputs that you have inserted, we derive the present value of the free cash flow. We discount by the weighted average cost of capital together with the extrapolation period, and we get to the present value of free cash flows, which result in an implied valuation today. Of course, this value will highly depend on the inputs that you have inserted into the input tab. So by varying the inputs even slightly, the number will vary here. And this, of course, is just an estimate. And then you can see also the revenue multiple based on the implied valuation today and the revenue, EBITDA, and EBIT resulting from your inputs. And then the last tabs, revenue, COGS, expenses, full-time employee, CapEx, and debt, allow you to give you an overview year by year, as you can see here, year by year and month by month, of the different items that constitute, for example, revenues. So new members per month, churning members per month, how many leave per month, the cumulative members, the membership revenues, the pricing, then the additional revenues, how many you sell per month, how many you sell per month, the pricing, sorry, not per month, these numbers are per year. Of course, the per month are here. Then the pricing again for the additional revenue, and so on. And then the total revenues, same for COGS. You can see the different components. In this case, in the input, we have only inserted the gym machines providers fee. For the expenses, recurring and one time. Again, all the recurring expenses that we have inserted, these will be either a fixed value or a share of revenues, depending on how you have structured into the inputs. And then the one-time expenses, full-time employees with salaries by department, and number of employees. Capital expenditure with overall CapEx, depreciation schedule, and residual value. And then the debt. So the bank debt, so the 3 loans that will allow you to input into the model. And then the overall outstanding debt.